Students, today I will discuss on FDIs as well as FIIs. FDI stands for Foreign Direct Investment and FII stands for Foreign Institutional Investment. I am Professor Probal Chakraborty. I will discuss all these things. Now, foreign direct investment, that is FDI, is basically, I would say, is lucrative for any country. Either you go by wholly owned subsidiary or by joint venture or by acquisition. That means if your company, headquarter is there in Basel, Switzerland, or in Germany or United States of America, you have your own company in India also, or say in China and other places. You can invest in different division which may be the wholly owned subsidiary of your own organization. It may be through joint venture also. I can cite an example of Hero Honda, which was basically an example of joint venture. Earlier, we could say General Motors had a tie-up with Toyota. That was also a joint venture. Or by acquisition. That means you have your own organization in foreign soil, and by acquiring, you are basically entering into this particular market. So it may be a strategic kind of thing also. So foreign direct investment is always lucrative for the country. Why? Government is very interested to do this kind of things. Why? Because it generates employment. Moreover, from consumer points of view, I would say monopoly will be stopped, because you have to face many competition, and consumer will have the edge because of that thing, because they can pick the right kind of things. The product which offers good values to them, they will buy these kind of things. Technological upgradation is required, because when you go for this kind of things, definitely farm will be benefited out of that, maybe through joint venture, maybe through acquisition, or maybe through wholly owned subsidiary. Always I would say technological upgradation will be there. Because today Toyota is Toyota because they had a tie-up, or I would say joint venture with once upon a time with General Motors. Today Toyota is number one. Now import and export will increase. Definitely it is basically a prestige for the country as well as a company, because their name, fame will be there everywhere in the world. Growth of economy is definitely, it is important, and cultural changes are there, because once upon a time we the Indians do not use the mobile phones, but although even today the I would say mobile penetration rate is not so I would say 100%, but important thing is that this brings total changes in our day-to-day life or activities. So this is also an important thing. Without mobile we cannot think of. Now foreign institutional investor, that is FII, what is that? Because investors or companies outside the country are investing here. It enhances flow of equity capital, thus improve capital structure, managing uncertainty and control risk, developing of hedging instruments. What do you mean by hedging? Hedging means you do not bother about capital appreciation. You have to think of capital protection also. Say for example, when you buy a house, what you are basically looking for, you will go for definitely buying an insurance for that particular thing, because to avoid unforeseen incidents in future. So that is basically hedging. Now enhanced competitions. FII brings efficiency in financial market as well as economic progress, and most important thing is that it increases corporate governance too, because when a foreign investor will invest money here, maybe through equity related fund or something, say a mutual fund or stocks or whatever it may be, definitely it will increase the corporate governance, which is very important. Now I have developed this particular slide based on India Brand Equity Foundation, which is available in their site, and it was basically taken in the month of May. In May 2020, private equity firm Vista Equity Partners announced investment of 11,367 crore in Geo platform for a 2.32% stake. Silver Lake in the same month invest in Geo platform. having 1.15% stake. In April, Facebook Incorporation announced an investment of 43,574 crores, into Geo platforms for 9.99% stake. That means all are basically inflow. I mean to say, foreign investors are investing in Geo platforms. That is good for the company itself as well as for our country itself. In January 2020, Amazon India announced investment of $1 billion for digitizing small and medium business and creating 1 million jobs by 2024. I have already mentioned that definitely FDI is related with enhancement of jobs. In January 2020, MasterCard announced its plans to invest up to $1 billion in India over the next 5 years to double its research and development effort in Indian market. What it implies? It implies a lot of things. Investment, definitely economic development will be there. Name and fame will be there. At the same time, employment generation will be there. Lot of technological upgradation will be there. In October 2019, French oil and gas giant Total SA acquired 37.4% stake in Adani Gas Limited for rupees 5,662 crore, making it the largest FDI India's city gas distribution sector. Similarly, in August 2019, Reliance Industries announced one of India's biggest FDI deals with Saudi Aramco to buy a 20% stake in Reliance Oil to Chemicals business at an enterprise value of $75 billion. What it implies? It implies that India is a very good destination for foreign direct investment. Now, important thing is that foreign direct investment, I am citing the examples which are basically of late 2019 as well as early 2020. Government initiatives. In May 2020, why India is an important destination for this, I want to say, the FDI, because government has to play an important role here. In May 2020, government increased FDIs in defense manufacturing under the automatic route from 49% to 74%. I would say in 2020 April, government amended existing consolidated FDI policy for restricting opportunistic takeover or acquisition of Indian companies from neighboring nations. Yes, it was earlier applicable with Bangladesh, Pakistan also. But right now, because of this, during this lockdown period, I would say one such example is there, because Bank of China is invested, huge amount in HDFC Bank of India. So what is important here, because hostile acquisition we have to resist. So because of that thing, this is a plan of government of India. In March 2020, government permitted non-residential Indians to acquire up to 1000% stake in Air India. Because we all know that Air India is struggling right at this moment of time, and because of that thing, government is planning to sell it off. In December 2019, government permitted 26% FDI in digital sectors. In August 2019, government permitted 100% FDI under the automatic route in coal mining for open sale. Now, Coal India has to face the competition. 100% FDI is permitted in insurance intermediaries too. That means it is a welcome move by the government. Now, investment made by FIIs or FPIs in India is regulated by the Securities and Exchange Board of India, that is SEBI. Now, today SEBI is very much vigilant, while the ceiling on investment is maintained by Reserve Bank of India. So you are basically ensured that SEBI as well as RBI, these two important institutions, will take care of all these aspects. Now, type of FIIs investing in India are as below. That may be hedge funds, foreign mutual funds, sovereign wealth funds, pension funds, trust, asset management companies, endowments, university funds, etc. Now, foreign institutional investor, non-residential Indians and persons persons of Indian origin are allowed to invest in the primary and secondary capital market in India through the portfolio investment scheme. Please under Please note that this is under the guidance of Reserve Bank of India. Under this scheme, FIIs as well as NRIs can acquire shares or as well as debentures of Indian companies through the stock exchange in India. Now, the government of Singapore, I would say as an example that 19% of its investment in emerging market equities. The fund has investment in 33 domestic firms valued at rupees 41,000 crore plus. It has invested in companies like Dr. Reddy's Lab, Infosys, HDFC Bank, DLF, Lupin, M&M, that is Mahindra and Mahindra, among other large cap stocks. That means this government is investing a lot of things. It comes as a FIIs, and basically this is taken from Economic Times. Now, Abu Dhabi Investment Authority has also invested in 21 Indian companies, which as of June 30 was valued at 18,943 crore. That means this fund generally invests not more than 20% in emerging market equities. In its 2015 review in July, the Sovereign Wealth Fund said, while the UK, Europe and Australia remain key jurisdiction for many investors and provide reasonable deal flow, there was more meaningful interest and activity in certain Latin American markets besides continued focus on India. Why India is basically an important destination? This will give you the answers. What I am citing here is basically latest development, I would say mid 90s, 2090s as well as this up to the level of June 2020. Now, what is important here, I would say once again that this foreign direct investment and FII both are equally important, because employment generation you have to take care, as well as corporate governance, because lot of problems may occur in Indian companies also when they are basically a lot of investors are coming and investing into Indian companies. Their overall work culture will change, everything will be changed. So because of this kind of things, these are basically welcome move. So FDIs and FIIs are very important for the students who are basically doing BBA as well as MBA. Hope they will love this particular video, and please, if you are in, I mean to say, if you enjoy my session, please I mean to say give a feedback of this particular video as well as register. Please register. Hope you will enjoy. Thanks a lot. Bye.